I turned one singular candle into over $100,000 in just 30 days, and not by trading more, but by trading smarter. So while most other people are downloading 7 new indicators and chasing 15 new strategies, I'm looking at one specific higher time frame candle that tells me everything I need to know. Because look, most traders think they understand everything about candlestick anatomy, but they don't. There's one specific detail within most candles that will tell you exactly where price needs to go, but 99% of people consistently miss it. So in this video, I'm going to show you exactly how I turned this simple concept into a money printing machine so that you basically can get a blueprint of my success and integrate it into your own trading. But before we get into any of that, I want to show you my P&L of today. Today's P&L is $33,736. Again, as you can see down here, we have a USDT M account, which is the one I'm at right now. Then we have the demo account, which is the one you're seeing here. So this is in fact a live account. And no, I'm not showing you this to brag. I'm showing you this because later on you will ask me, how come this is so simple? Well, because I don't need to sell you anything. And so there's no reason for me to overcomplicate things that are actually fairly simple. Now, if I were to ask you, what are we looking at here? I bet the vast majority of you would say, well, that's a bullish candle. And that is true, but beneath the surface, we see an entire trading range, market structure, and direction. And that's the difference between a regular trader and someone who trades within the top 1%. You see, a candle isn't just a candle, it tells an entire story. But that's not all. You see, a candle tells an entire story. So when you look below the surface of a bullish or bearish candle, this is exactly what you'll find. On the left side of the screen, we have a bullish candlestick, and on the right side of the screen, we have a bearish candlestick. Now, the bullish candlestick is also what we call an open low high close, because bullish candles, well, they open low and then they close high. And you might sit there and wonder, well, of what use is that information? And that's true. Without any context, it doesn't really matter. But here's the kicker. Whenever a candle opens and then immediately runs lower, well, then there's a very, very high chance that the rest of that candle is going to go higher. Because again, it's an open, right? Low, high, close. Same exact thing goes for the bearish candle, although this, instead of being an open low high close, this is an open high low close. And so if a candle opens here and immediately goes higher, there's a good chance that this is going to close bearish, and therefore we can expect bearish price action. But here's the thing, most traders still can't make it work. So let me show you exactly how this system actually works. Step number 1, annotate the daily candle open. Now, when I say annotate the daily candle open, it's quite simple. Right here, we have a bullish candle, and this is the open of that candle. So at 8 PM EST, every single day within the crypto market, well, then a new daily candle gets printed. Step number 2, zoom into a 5 to 15 minute time frame. Now, this is optional. The 5 and 15 minute is simply what I prefer when I'm trying to execute this exact system. In fact, we are essentially trying to predict an entire day's worth of price action, so you could go even higher than the 15 minute, which means you could be looking at the 30 minute or the hourly time frame. It totally depends on you. For me, that is the 5 to 15 minute time frame. And as you can see, this right here represents the daily candle open at 8 PM EST. Now, step number 3, does the first move go lower or higher? And that right there is important. That is arguably the most important part of this entire system. It's what makes it or breaks it. You see, if the market now goes lower, well then, as I explained before, we can expect this to be an open low and then a high close. And so if the first move of that daily candle is to the downside, well then I'm gonna expect the rest of the day to be bullish. So let's play it out a little bit more and see whether the move goes lower or higher. And as we can see, the market is slowly starting to go lower and lower. Now again, what is displacement? Displacement is an aggressive move with volume. It's basically the move that determines who is actually in control. So if we see large bullish displacement, it means that we are seeing massive candles, and there's basically no doubt that bulls are currently in control. It's also a confirmed structure. If we now start seeing massive displacement here, I am really confident that this open low high close is in fact what we're about to see. So again, we will continue to play it out here for a little bit and wait for that displacement. And so what I'm going to do is look for any entry model that allows me to go long. In this example, I would love to get filled on the breaker block that you're seeing here. Now, I was a little bit late with my entry, So hopefully we can still get filled. Now my stop loss preferably goes near an internal low. So this right here is the first swing low that we see after our entry. And so that is where I'd like to place my stop. Now my take profit on the other hand is set at a fixed 2R. Now can you experiment with discretionary take profits? Absolutely. But if you want to make sure that no matter what you win more than you lose, well then I highly suggest that you simply stick with 2RR. That means we are winning twice as much as we are risking. Now let's try and play it out here and see if we actually get filled. And we did. Would you look at that? Again, all I had to do was really look at the first move after the daily candle opened and then trade in the opposite direction. I found any old entry model that would allow me to go long, and then I basically just let my trade do the heavy lifting. The problem here is a lot of traders will get filled either here or here. And then as soon as the markets start going higher, they're thinking, yes, what? This trade is just amazing, right? It's very easy to sit through. But then as soon as the market starts pulling back here towards their entry, oh, they get cold feet. And that's where a lot of mistakes are made. And so you really just have to understand that you're trading a system based on probabilities. You see, thinking your system wins 100% of the time will cause FOMO, overtrading, and irritation. Not only will it cause all those issues, but it will also cause you to burn out because it's entirely impossible. There is not a singular trading system on God's green earth that will have a 100% win rate. It's not possible. And the exact same thing goes for this system. Do not expect it to work 100% of the time. The key here is it's proven to work over an extended period of time. And the same exact thing goes for this system. Do not expect it to work 100% of the time. What's key here is that it's proven itself over an extended period of time. And so now we have an edge over the market, which is our power position. That is our entire job throughout our career, making sure we have an edge over the market. And the only reason we can do that is to trade a system that has proven itself through time. So again, much like before, step one, annotate daily open. Right now I'm looking at a 15-minute time frame and we are trading Bitcoin. So what I'm going to do is mark out the 8 o'clock candle EST because that is the daily candle open. Step number two, does the first move go higher or lower? So what I'm going to do now is play it out a little bit here, and then we want to pay attention to whether the first move goes lower or higher. Again, if the market continues lower here, well then I'm going to expect that it's going to present a long opportunity. But if the market now reverses and goes higher for a little bit, I'm going to expect it to give me a short opportunity. So let's continue to play it out here for a little bit. And as you can see, we went lower. Now, the context right here matters a lot because what you might notice is that we actually swept the low of the range. What's key to pay attention to here is how the market reacted to sweeping this low. Daily candle opened here, right? And we immediately went lower. We swept the range low and we saw no follow through to the downside. That right there immediately confirms my theory. Now, I'm much more confident that this is in fact going to work out exactly how I thought it would. So we've just created an imbalance here. As you can see, we have a small fair value gap here, and that is exactly what I'm going to use as my long entry. Now, my stop loss, I preferably want to include this larger imbalance that you're seeing here, and then I'm going to target this internal range high that you're seeing right here. Now, don't get it confused. If I say internal highs, it's basically the highs and lows in between the highest point of the range and the lowest point of the range. So this is an internal high, and that is exactly what I'm going to use as my take profit. Now, you might notice this only gives me a 1.8 risk to reward. Is that really worth it? I mean, you will hear 1,000 different opinions on risk to reward, but as long as it's positive, I have no problem in whatever risk to reward system you decide to trade. So we'll proceed with this 1.8R trade and play it out to see exactly what happens. And as you can see, I could have used a much larger take profit here, but I have a rule. As soon as I'm out of the trade, well, then the rest is none of my concern. What I can do is learn from this, right? I can write it down in my journal and then collect it as data. Because if I now start to realize, okay, every single time I hit take profit, the market goes, quite a bit further. Well, then that's a pattern and we can work on top of that. But I don't want you to change anything about your system if you don't have any data backing it up. So again, you could have made a load of money here in just 3 hours. To me, that sounds like a pretty good workday. Now, a quick side note, I just launched my free crypto community. I dropped these exact setups and a course entirely for free. Now, you might sit there and wonder, well, why are you doing this for free? Well, because my plan is to build the largest crypto community in the world. And if it's free, well, then that means everyone can join. So if that sounds of any interest and you're actually taking this stuff serious, well, then I would highly recommend that you check out the link down below. Now, here's what most traders do wrong. You see, I've just given you a fairly simple system. It's not rocket science. But a lot of traders will sit there and think, okay, well, this is too easy for me to want to trade. For some reason, trading has to be incredibly difficult for these guys to want to trade. And what if I told you I know the exact reason? They are addicted to dopamine and not results. That right there is the end of it. They are chasing dopamine because that's what they're taught. They're scrolling TikTok all day, they're going on Instagram Reels, they're watching YouTube videos, which all provides them with instant gratification and a shitload of dopamine. Trading is not that. And here's the thing, trading is the opposite. It's supposed to be mundane and boring. You see, if you're trading this system day in and day out, well, then I guarantee you will see results. But I also guarantee that it will be extremely boring. But here's the difference between me and a lot of other people. Is it boring? Yeah. Do I care more about making money than being bored? Absolutely. And so that right there is the exact dilemma that you have to figure out. Would you rather trade all day and have fun but lose money consistently, or have a boring trading day but make money consistently? Let me show you this last example so that you hopefully understand exactly what you need to look for. The first thing I'm going to do is mark out the daily candle open, which in this case is this candle right here. The next thing I'm going to do is pay attention to whether the first move of that daily candle is lower or higher. Now again, if it goes higher, I am looking for shorts. If it goes lower, I'm looking for longs. So let's play it out here a little bit and see exactly what happens. Now, as you can see, we just saw immense displacement to the upside. So immediately I'm gonna look for shorts, but I have to wait for displacement in the opposite direction to show me that my theory is correct. So let's continue to play it out here until we get some sort of bearish displacement. Again, guys, this right here is not displacement. This right here does not confirm direction. We do not want to be trading this. So again, let's continue to play it out. And there we go. This is the displacement I was looking for. So what I'm going to do next is trade a very basic trading model here and go ahead and short this large fair value gap that you're looking at here. I'm going to make sure that my stop loss when I'm trading these larger imbalances is at least above the middle point of that imbalance. So this looks good to me. Again, you have two choices here. You can either go for the fixed risk to reward of 2R, or you can take it to the next level and go for the range low. Now, here's the key. You can actually do both, and that's what I do. So what I'll normally do is take off about 80% of my trade when it hits 2R, and then I'll let the rest of the 20% run until the range low. So let's play this out and see exactly what happens. And as you can see, it just absolutely dumped towards the lows. Now, there's one thing I haven't told you. The one thing that determines whether you will become a profitable trader or remain the exact same. This is what separates profitable traders from unprofitable traders, and that is your number one priority is protecting money and not making it. I have been trading for about 7 years, and I can tell you with confidence that money is a byproduct of doing the right thing over and over again. The moment you start focusing on it is the moment you will lose everything. It's simple, and it doesn't matter what you do, whether you do e-com, whether you run an agency, or whether you are trading. Money is a byproduct of doing the right thing over and over and over again. So stop trying to chase money. In fact, it's a lot like girls. If you keep chasing girls and keep chasing girls and keep chasing girls, well, then all they're going to do is run away. But if you now focus on the right things, right? Build yourself up, get more money, get in shape, well, then they come to you. And the exact same thing can be said about money. So now that you understand this very simple one candlestick strategy, it's time for you to start implementing it in the live market. And that's exactly why I built a free Telegram, and my students are getting results like this, and this simply by following the trades that I provide them with. Now, do I give signals in hopes of you becoming a millionaire? No, absolutely not. That's not going to work. It never has, and it never will. What is going to work is me giving you a signal and then providing every last one of the details as to why I enter that position and why I exited. So not only do you get access to all of my personal trades, but you will also get access to this step-by-step process that turns simple candlesticks into consistent profit. Now, we were originally going to charge $797 for this community like most other programs do, but then I decided to give it all away entirely for free. Now, believe me, charging nearly $800 for this would even be considered cheap, because not only do you get access to my Telegram, But you also get access to a school community with a built-in course that shows you all the different systems that I use to get to exactly where I am today. So if you're ready to stop overcomplicating everything and start reading individual candles like a true professional, well then I would highly recommend that you click the first link down below and join the community. I'll see you on the inside.